So this is what we're going to go through over the next 12 weeks to make this a reality. 12 parts of the program. We're going to start by looking at your business growth drivers, talk about the key inputs that you need to be focused on in order to make consistent, small, incremental gains, and through doing that, achieve outstanding growth. We're looking week 2 about a practical example of how making these small changes can have a very dramatic impact on both your profitability, your cash flow, and the value of the business. And then we start to look at each one of the key drivers in turn. And these are sometimes called KPIs. So KPIs, key performance indicators or drivers. And we do these in a specific sequence. We start with what's called quick win cash strategies, or you might look at that another way, section 3. Your overheads. How do we get more out of our overheads? And we do that first because it's the one you can impact the fastest. You can make decisions in the morning that have an impact in the afternoon. Everything else takes a little bit longer and a little bit harder. We move then on to margin and cost control. So this is about improving your gross margins. The fastest way to improve your I jumped one. Week 4, we look at cash flow. The reason we look at cash flow is for any business that's giving trade credit. In fact, any business, cash flow is the most important thing. Running a profitable business is great, but if you run out of cash, your business is dead. So we hit cash flow second, A, because it can have a dramatic impact on your cash position, and B, it's really totally under your control virtually, and you can influence things very quickly under cash control. Margin and cost control takes a little bit longer, but not very much longer, so you can do this really quickly as well. And this is all about increasing your gross margin, so you actually get a better profit, better cash position on every single transaction. So 3, 4, and 5 are the easy ones, if you like, the easy and the fast ones. Then we move on to those that are a little bit more difficult, take a bit longer, a bit more complex. We move into improving customer retention or reducing customer attrition in week 6. Week 7, we go on to how do we sell more to existing clients. So we go through the gap analysis and identify opportunities for selling more to existing clients. And it's frequent that, or in fact, the average upsell opportunity within an average business is about 40%. So you should be able to sell 40% more just by maximizing the opportunity of selling to your existing clients. And we're going to go through specific strategies about how you can achieve all of these great things each week. In week 8, we stay on a similar-ish theme to gap analysis and cross-selling, focusing on strategies to increase the number of transactions that each client engages in and to increase the average transaction value. That will take us to week 8. And at week 8, we look at the hardest, the one that requires the most effort, that takes the longest, that delivers the least increase in profitability, which is the one that everybody seems to go for first, which is new customer acquisition. So the message to take away from today, if nothing else, is new customer acquisition probably is not your number 1 priority. And if you thought it was, then maybe it's worth just making sure you block the time out and join us for the future sessions. So at this stage, ideally, we know how to grow a business. Then the only question is, well, at what point is enough? So if our business is to be contributing to our personal wealth, and at some point our personal wealth is enough, at that point, we have financial independence. We can choose if or when we go to work or not. But you need to know your number. You need to know what that number is, and there's quite a lot of detail goes into your personal planning and your business planning, because again, those two are inextricably linked. Then we look at achieving exit readiness. Just because you have a business that achieves a certain level of profit, or if this doesn't make much sense, EBITDA, which is earnings before interest, tax, depreciation, and amortization. We'll talk about that more as we go through the course. But just because you have a profitable business that appears to be run well doesn't mean you can sell it. We'll talk more about that in a moment as well. So we'll talk all about what you have to do to achieve exit readiness in week 11. By which stage we put everything in place, and then we just conclude it really by saying in week 12, well, let's understand what that means in practice. So we're talking about having a plan. How do we build a plan? How do we build a forecast? How do we link our profit and loss, our cash flow, our balance sheet, and integrate that into a management pack that we use to grow our business and track and report performance versus progress? Because just going back to achieving exit readiness, the one thing I can guarantee you is any buyer the first thing they'll ask for is 3 years worth of management accounts, and they are not asking for just a P&L and a balance sheet. They will want a lot more. If you can't give them what they want, it's probably going to impact badly your ability to sell or your ability to achieve the number you're looking for. So that's the 12-week program for FiMBO. That's what we're going to go through in the weeks ahead. So, an exercise for you. Please just imagine